2022 was a rough year for the stock market. The S&P 500 was down almost 20%, but did you know that the Dow Jones Industrial Average was only down about 8.9%? Jim Cramer from CNBC has a list of 5 stocks that he believes have a room for growth in 2023. In addition to that, these stocks all pay a dividend, and all of them more than 2%. And our winner today, holding the #1 spot, is a well-known company with a 23% upside potential and a dividend yield of 3.15%, which means safety in dividends and a lot of growth potential. So you can be assured that not only will you get some growth, but also a nice little dividend along the way just for holding on to these companies. Those of you unfamiliar with the Dow Jones Industrial Average, it actually has only 30 stocks in it. The Dow Jones Selection Committee chooses 30 stocks that they believe best represent the US economy. This list doesn't change very often. One of the companies today is the first company to ever issue car insurance. Alright, without any further ado, let's go ahead and take a look at Jim Cramer's top 5 dividend growth stocks for 2023. To keep updated, be sure to subscribe and hit the notification bell so you can be amongst the first to know when more investment inspiration videos are available. Coming in at number 5, Travelers Company Inc. Ticker symbol TRV. Travelers is an insurance company, and it's the only insurance company of its type to be in the Dow. It's also Jim Cramer's favorite insurance company. It gained membership in the Dow in 2009. And this is that one. Travelers Company was the first company in America to offer automobile insurance. When was that? 1897. In 1897, cars were still pretty new and an expensive luxury. So not many people were willing to buy insurance for them. But Travelers saw the potential for growth and decided to take a chance. The first person to buy car insurance was actually a doctor in Westfield, Ohio. Now, since they were in on the ground floor, they have been able to establish themselves as a major player in the world of car insurance and property and casualty insurance. In fact, the company has grown so much that it is now one of the largest insurance providers in the country. Next time you see that famous red umbrella logo, you'll know you're dealing with a company that's been around for over a century. And currently, this company pays a 2.01% dividend yield, and it's Jim Cramer's Dow pick for insurance in 2023. Next on our list, and the oldest member of the Dow Jones Industrial Average, Procter & Gamble. Jim Cramer's pick for the recession-proof stock and a member of the Dow Jones from 1932. Procter & Gamble is not just a company that owns practically everything you use in your home. They've also invented a lot of it. Procter & Gamble was involved with the development of the first synthetic detergent during World War II. Prior to the war, most laundry detergents were made from animal fat, which was expensive and in short supply during the war. In an effort to find more affordable and plentiful alternative, Procter & Gamble began experimenting with synthetic materials. After years of research and development, the company was able to create a synthetic detergent called Tide, which was launched in 1946. And of course, the rest is history. I'm sure you've seen a Tide commercial or maybe have used Tide in the past. That was invented and continues to be one of Procter & Gamble's primary products. Procter & Gamble is Jim Cramer's Dow staples and recession-proof pick for 2023. It also currently pays a 2.43% dividend yield. Pretty good for a company that's been around for a long time. Next on our list, Johnson & Johnson. Ticker symbol JNJ. Jim Cramer likes this stock due to its fast-developing pharmaceutical arm. Now, Johnson & Johnson joined the Dow in 1997, and for me, up until the COVID vaccine, I really never thought of them as a pharmaceutical company. But Johnson & Johnson's pharmaceutical business, also known as Janssen Pharmaceuticals, has a long history of working on the development of treatments for neglected diseases, things like tuberculosis. In fact, Janssen Pharmaceuticals has made it their commitment to work to abolish TB. This stems back from its founder, Paul Janssen, who, unfortunately when he was a child, lost his sister to tuberculosis. Johnson & Johnson has been at war with TB and the multi-drug resistant TB, MDR-TB, since then, and has received grants from the FDA to develop new TB antibiotics and work in partnership with Europe's Innovative Medicine Initiative, along with 9 other research institutes to help deliver on their 10-year commitment to end TB. Jim Cramer's Dow pick and medical supply pick for 2023 is Johnson & Johnson, and currently they paid 2.62% dividend yield. Now, many of the names on this list do not have a large dividend, but what they do have is stability and a lot of room for growth, seeing the market has been down quite a bit. And once people start to realize that these stocks are trading at bargain prices, we'll probably end up adding it to their portfolio as well. And it's now a time for you to get on the bandwagon before everyone else starts jumping on. Now, if you like these kinds of videos, be sure to like and subscribe for more investment inspiration videos so you can be the first to know when we have any new videos available. Also, many people tend to disagree with Jim Cramer. And if you are one of those people, what are your top picks for the Dow Jones? I'd really like to know. Next on our list, we have a bank, Goldman Sachs, ticker symbol GS. Now, Jim Cramer actually favors this company due to them having a much more positive outlook than in 2022. Goldman Sachs gained membership in the Dow Jones in 2013, and unfortunately, like many other investment banks, has a rather male-dominant and corrupt image. Goldman Sachs, though, has a long history of philanthropy. One of their more notable endeavors is their 10,000 Women program, which aims to provide business and management education to underserved women around the world. This program has reached over 15,000 women in more than 50 countries and has been recognized as a model for private sector involvement in economic development. Goldman Sachs also has a number of initiatives in place to promote sustainability and environmental responsibility with the goal to make its own operations carbon neutral. Overall, Goldman Sachs has a strong commitment to being a responsible corporate citizen. But back to business. Mergers and acquisitions, the primary driver of Goldman Sachs' revenue. In 2023, Goldman Sachs expects to see increases in their mergers and acquisitions part of their business. So it might be a good time to pick up an old bank and investment firm at low prices. And this is Jim Cramer's Dow pick for investment banks in 2023. They are currently paying a 2.86% dividend yield. Now, the last name on our list and paying the highest dividend and having the most growth potential, we have Chevron Corp, ticker symbol CVX. Now, Chevron has been a member of the Dow since 2008, and Jim Cramer believes that as long as oil remains above $60 a barrel, Chevron will have another awesome year. While Chevron is known primarily as an oil and gas company, it is also invested in a number of alternative energy products. Those products include wind, solar, and biofuels. For example, Chevron has invested in a number of wind farms in the United States and has also partnered with other companies to develop solar and biofuel projects. Chevron also has a number of initiatives in place to promote sustainability and environmental responsibility, including initiatives in place to reduce its greenhouse gas emissions and programs to restore and protect habitats in areas where the company operates. Chevron currently pays out a 3.15% dividend yield and is Jim Cramer's Dow energy pick for 2023. Now, if you think an energy company is good when oil is above $60, imagine a company that will make money as long as oil is above $40. Now, if you're here listening to this, then please like this video, share, and subscribe. If we do get at least 100 likes on this video, I'll go ahead and release my energy pick for 2023, and I hope to see you there.